Hello, welcome to another episode of Finance in 5. My name is Charlotte Jessup and this is the Looking After Your Pennies YouTube channel. Today I'm going to tell you all about lifetime ISAs. Let's start the clock. So let's start with some basic facts. So lifetime ISAs are part of the ISA family, which stands for individual savings accounts. There are 4 different types of ISA, and you can put £20,000 per year into your ISAs, so shared across all of them. Now, the money that you put in there and any money that you make on it is tax-free, which is a real perk. Now, the lifetime ISAs are a little bit different. You have a few options with these, and you can only pay in £4,000 of your ISA allowance into them. But the benefit is that you get a 25% bonus on that money. So let's say if you put in £4,000, the full amount that you can put in there per year, the government will give you a top up of £1,000. So essentially some free money. Now, you have to be 18 or over to open a lifetime ISA, and you have to do so before your 40th birthday. Now, there are 2 versions of this ISA, so let me just explain the difference. So the first one is a cash ISA. So this is essentially a savings account. You pay money in and you earn interest depending on where you put that money. So there are a few people that offer this, and these include Moneybox, Beehive Money, Paragon Bank, Newcastle Building Society and Skipton Building Society. So like I say, this is just for saving. You will earn interest on this money as well as your 25% bonus. There's also a stocks and shares version of this. So this allows you to invest the money that you put into your lifetime ISA, as well as the additional money that you get from the government. Now, obviously, depending on where you invest this, you will have access to different sorts of investments. So you'll need to choose your provider for this carefully. A few people that are offering this include AJ Bell, Hargreaves Lansdown, Nutmeg and Moneybox again. Now, one more thing to remember. Lifetime ISAs will come with a penalty for withdrawing that money. So they have 2 purposes, and I will talk about those in a minute. Now, if you withdraw that money for something else or before the deadline, then you will pay 25% as a penalty. Now, this may sound the same as the bonus, but it's not quite. 25% of the total pot is more than the 25% bonus, and you could stand to lose up to 6% of what you put in. Now, this includes any money that you make in growth on this as well. So it's worth considering whether this is the right option for you and speaking to an expert if you need to. So what are lifetime ISAs for then? Well, they come with 2 purposes. The first one is to help you save for your first home. Now, I'm sure you can agree that that additional £1,000 is going to be very useful when you're trying to save that house deposit. But there are a few requirements to this. First of all, it has to be your first home. You can't have bought a house like anywhere else in the world, and you can't have even inherited one even if you didn't live there. It needs to be the first home you have ever owned. The house you're buying also needs to be worth less than £450,000. So, this might not be appropriate if you are buying a house in the middle of London and it's super duper expensive, for example. Now, you can do this as a couple too. So let's say you are both first-time buyers, you can both have lifetime ISAs and you can get double the bonus that is available. If you're buying with somebody that's already owned a house before, but you have not, you can still use a lifetime ISA to contribute to the cost of buying that house. Now, normally saving for a home is a short-term event. You're doing it for a couple of years to build up that deposit. If that's the case, then you probably want to look into the cash ISA version. It's less volatile, you're not going to lose your money because the stock market's crashed just at the point where you want to buy your house. But that doesn't mean you have to go for that option, it's probably just the recommended version. Now, the second reason you can use a lifetime ISA is to invest for retirement. So if you're doing this, you need to make sure that you have opened that lifetime ISA before your 40th birthday, but you can continue to pay into it up until you are 50. You won't be able to access that money for your retirement until you reach your 60th birthday. At that point, you can take out partial withdrawals or you can take the whole lot out in once. Now, the government stressed when they created this that this was not a substitute for a pension, and there are probably a lot of perks to having a pension over having a lifetime ISA. It's instead intended to complement that, to give you a little extra pot to splash out on something that you enjoy. Now, if you're looking to do this for retirement, you may want to consider an investment version, so the stocks and shares version of this ISA. This will enable you to grow that money rather than just relying on the low interest rates that are available in the cash version. Obviously, you might want to seek financial advice about this or do your own research. So please go ahead and do that rather than just taking it on my word. So there you go, that's a lifetime ISA. I hope I've explained this to you in a way that makes it easy to understand and maybe gives you something to think about going forwards. Thank you so much for watching. Please share this video with a friend if you know somebody that it might help. Don't forget to like and subscribe, and I'll see you in the next one. Bye.